You can forget what you've heard about the old oil booms. Seriously, the next massive resource race, it's not going to be fought in some dusty oil field. It's happening right now, in recycling plants. We are stepping into a golden era where old, spent electric vehicle batteries, well, they're not just waste anymore. They're a multi-billion-dollar strategic asset. So let's dive into what's really going on in this incredible new landscape.
And just to get a sense of the sheer scale we're talking about, look at this number. 210,000 tons. That's how many waste batteries a single company, CATL, is expected to process in 2025. That's not the entire industry, mind you. That's just one big player. And believe me, it is just the very beginning of a literal tsunami of these materials that's about to hit the market.
All right, so in this explainer, we're going to break down the 5 key things you need to know to understand this industry. We'll look at the big picture trend, the strategic splits, the tech wars, the all-important supply chain, and finally, we'll look at who is really set up to win this thing.
So, first up, the coming battery tsunami. What is this all about? Well, for decades, right, we've had to dig valuable minerals out of the ground. That whole era is starting to give way to something called urban mining. Think about it. The millions and millions of EV batteries that were sold over the last 10 years are now getting to the end of their lives, and that has created this massive, totally new, above-ground source of critical minerals.
And this shift, it's not just a theory. It's very real and very quantifiable. By 2030, experts are projecting that almost 40% of all battery materials could come from recycled stuff. This is huge. It completely changes recycling from just being, a nice environmental thing to do into a core piece of supply chain security for car companies and, frankly, for entire countries.
But despite that incredibly bright future, the industry right now is in a tough spot. It's navigating what some analysts are calling the EV chasm. It's this tricky period of slower than expected growth and really wild swings in metal prices. And all that pressure has basically split the entire industry into 2 completely different camps, each with a very, very different game plan for how to survive.
And this slide, wow, it just lays out that division so clearly. On one side, you've got these cash-rich giants, the aggressive expanders like CATL, who are just doubling down, pouring billions into new construction. But then on the other side, you've got the capital conservers. These are smaller, pure-play companies like Aquametals, and they're being forced to hit the brakes on huge projects, even taking multi-million-dollar write-downs just to stay in the game. It's a classic story, really. The stronger getting stronger, while the more vulnerable are having to scale back their dreams.
Okay, let's shift gears to the next battleground, technology. For years, battery recycling just meant one thing, pyrometallurgy, which is basically a fancy way of saying you smelt the batteries in a huge, high-emission furnace. Yeah, that's quickly becoming yesterday's news. The real race now is to come up with cleaner, way more efficient methods that can act as a kind of competitive advantage, or a moat, to protect your business.
And this table here breaks down how everyone's placing their bets. You've got Sung Il, who's all in on building a global network of pre-treatment centers. Then there's Sibacham, who's trying to simplify the chemical process itself to drive down costs. Aquametals? They're betting big on a fully electric process, hoping to win on being the greenest of them all. And KTL? Well, their moat is just pure, absolute scale. They're so big they can achieve efficiencies nobody else can even touch. Each one of these is a calculated risk, a different path to victory.
But here's the thing, and this might be the most crucial point of all. You could have the best, most amazing technology in the world, but it is completely worthless if you don't have a steady supply of old batteries to feed into it. In this industry, technology might be the weapon, but feedstock, that raw material, that's the kingdom. Securing a reliable stream of battery scrap is the ultimate source of power here. End of story.
So how do you secure that feedstock? The answer is creating what's called a closed-loop ecosystem. This means you partner directly with the car and battery makers themselves to get all their manufacturing scrap and their old, end-of-life batteries. The huge advantage here is that it protects you from the crazy, volatile open market for something called black mass, which is just the shredded-up guts of old batteries. And as you can see here, the big players have this locked down. But then there are outsiders like Aquametals, who are left exposed to all that market risk. That is a massive, massive competitive vulnerability.
So, okay, with all of these different strategies and pressures in play, who's actually set up to win? Let's stop speculating and actually look at some of the data to see which companies are showing real resilience and which ones are showing some serious signs of risk. Okay, this chart is just incredibly telling. Take a look at the 2025 revenue from Europe, which is a super important market with what they call a green premium. Samsung SDI and the integrated giant pulled in over $2.4 billion. Now look at Sungyel High-Tech, a specialized pure-play recycler, just about $12.5 million. The difference is staggering, and the takeaway is pretty clear. In a business this expensive, that kind of gap in market power can absolutely dictate who has the cash to keep innovating and who can survive a downturn.
And here's another sign of stress. CATL, they have the physical capacity built out to process 4,000 tons of material. But in 2025, they only actually produced 1,475 tons. That's a utilization rate of less than 37%. This points to a huge bottleneck somewhere. Either they can't get their hands on enough feedstock or they can't sell what they're making. For anyone watching this space, that signals a major drag on profits. It's a mismatch between what they've spent and what they're actually earning.
So all of this brings us to a really new way of thinking about financial resilience. In this industry, just looking at a company's debt doesn't tell you the whole story, not even close. True resilience comes from having one of those powerful integrated ecosystems that we talked about, one that generates consistent positive cash flow. That's the buffer. That's the shield that lets a giant like CATL just absorb price shocks that could absolutely cripple one of the smaller, more exposed pure-play companies.
So what's the big takeaway from all this? I think this quote from HDIN Research just sums it up perfectly. The future of this entire industry is going to be defined by two things. First, your ability to meet tougher and tougher government regulations, and second, your ability to master clean, efficient, zero-carbon technology. The old Wild West days of just building a bigger plant are over.
And all this leaves us with a final, really fascinating question to ponder. As this idea of urban mining goes from being a nice green initiative to an absolute strategic necessity, who's going to win? Is it going to be the massive, resilient incumbents who have the scale to weather any storm? Or will it be the smaller, nimble, disruptive innovators who are betting everything on a single technological breakthrough? The race for the new green oil is officially on, and honestly, the outcome is anything but certain.